Good morning, everyone. Darius Dale here to present our macro minute for Wednesday, December 29th, 2021. Starting with markets, we have stocks mix this morning with the U.S. equity markets leading, commodities mix, crypto mix, U.S. dollar flat, global bond yields mix this morning. Big movers, not a ton going on, but Shanghai Composite, copper, silver, and WTI each down nearly 1%. Nat gas up 3%. On the economic front, yesterday's U.S. home price data were marginally confirming of our outlook for disinflation in early 22. So we got the FIFA U.S. home price index that slowed 30 basis points to 17.4% year over year in October. That's the lowest rate we've seen since April. The S&P CoreLogic Case-Shiller U.S. National Home Price Index slowed 60 basis points to 19.1% year over year in October. That's the lowest print we've seen since June and the slowest rate of change, that minus 60 basis points, since July of 2014. If you take it into the chart here, recall that the supply-demand imbalance that drove the surge in home prices earlier this year, and that led the surge in broader consumer prices by 4 to 6 months. If you think about kind of home price appreciation taking off in like sort of last August of 2020, and really kind of front running this big move higher right here in inflation by roughly 4 to 6 months, depending on which month you decide to look at that analysis from. So to the extent that pattern holds, we should be well past the peak of broader supply chain driven inflation by the end of the first quarter of next year. So that obviously has implications for asset markets, Fed policy, and things of that nature. So be aware of that. If we do see a continuation of this red line higher into and through that period of time, i.e., inflation will continue surprising both our and economist consensus expectations to the upside, we're talking about an expectation for tighter monetary policy, much more than what is currently priced into the Eurodollars curve and things of that nature, and obviously with respect to the Fed's dot plot. So be aware of that. Inflation is increasingly the risk to investors, to your portfolios. With respect to the probable range setups, overbought signal in WTI, still the nat gas, 10-year Boone yield, 10-year Swiss yield, 10-year gilt yield, and the 10-year tips break even here in the U.S. market. Oversold signal in the Shanghai Composite and dollar versus the Mexican peso. S&P 500 is bullish fams with minus 3.5% of downside with 2.1% of upside. WTI bearish fams minus 14% of downside is at the upper boundary of its probable range still. Bloomberg Dollar Index minus 0.2% of downside versus 1.4% of upside. That's still bullish fams. 10-year Treasury yield back to neutral vams minus 14 basis points of downside versus 7 basis points of upside. Bitcoin minus 6% of downside versus 11% of upside. Neutral VAM still. Ethereum also neutral VAMs minus 5% of downside versus 16% of upside. So some good risk reward in crypto there. Gold minus 1.1% of downside versus 2.5% of upside, and that broke back to bullish VAMs yesterday. So with that, Darius Dale presenting our macro minute for Wednesday, December 29th, 2021. Going to be offline tomorrow and Friday. So catch you guys back next week. Cheers.